How's it going, everyone? Brian Hoops here, Midwest Market Solutions. Market Insider TV closing commentary Friday night, November the 3rd. Thanks for joining us here. This is a chart of cattle, and I'm going to highlight this and zoom in on it a little bit closer. All right, this is Thursday's bar here. This is a bearish reversal, and it's still intact. Even with the sharply higher moves today, limit up in the $3 move, limit up, expanding contracts for Monday. We have to negate this reversal first before we can just totally ignore it. Now we'll go back here, and all these blue bars that you see, these are all reversal bars. I've highlighted them, so we have a lot of reversals. It's not uncommon to have this in cattle or a lot of these markets, but cattle especially. Sometimes it marks a major significant high. Here we had a reversal, and then it was never negated, and it ended up making a high as the market continued to work lower. Kind of the same thing right in this area. Here was a reversal. Here was another reversal. We never negated them. Sometimes they can mark lows like they did back in here. But not always. Not always. It's not. Nothing is 100% in this commodity business. So we've got to negate this, then we can kind of ignore it. But until we do, you have to respect that reversal's there. And if we don't take it out on Monday, profit taking is likely to set in, and you'll see this pull back into this 121.70 area that we mentioned previously. Cash trade this week, just nothing but bullish. 124 to 125, $6 to $8 higher compared to the previous week. Trade in the north, 121 to 125, and on a dress basis in the north, around 192, up $10 from a week ago. So that's what fueled limit up gains in the cattle today. If you look at a feeder cattle chart here, we did negate the bearish reversal that we saw in this market. We saw this reversal on Thursday, but we negated it with higher prices on Friday. So we can ignore that one. And as far as hogs go, pulled back. We continue to push lower here. This last bar higher here on the 31st, and ever since November started, we've pulled back in this hog market. Over in the soybeans, we're back near the uptrend line. We had the one-day breakout above the resistance of 994. Let me zoom in on this a little bit. So we had one-day breakout above 994. We're pulling back in here. We're going to come back into this trend line, and this 982 area, 984, that's going to be good support for January soybeans. We should try and bounce out of here again, but certainly you don't want to take out this area of support right in this area, this 981, 982. You don't want to turn this lower, break this support here in this soybean market. 13 cents lower. And the reason why we didn't have any private export sale announcements, soybeans were left out in the cold. Remember, soybeans have been really the export leader over the last several weeks when early stages of harvest. But today it was announced 102,000 corn to Mexico, 135,000 corn to South Korea, 251 sorghum to an unknown, and also 300,000 metric tons of hard red wheat to Iraq. Nothing out of the soybeans today, and in fact no soybean sales this entire week, and I think that's what weighed on soybeans here into today's close. Corn didn't get hurt that badly. Inside bar down a penny and a half, and the wheat, despite some positive export news, just a penny higher. So we're still in this downtrending trading range in this market. Hope you have a great weekend. We'll be back Sunday night with our weekly insider newsletter and our trade update. Have a good weekend. Talk to you then.